to the general ledger. So on the balance sheet, we have inventory accounts that represent how much inventory we actually have out on the shelf. So every period end, what we do is we have a reconciliation process where we need to make sure that that value that is stated on our financial statement is an accurate representation of the inventory that we physically have on hand. So how do we go about doing that? Well, the typical process would be first is we can run a stock status report. What you see here is the typical example of something that you get out of J.D. Edwards, although most companies I deal with have written their own version of that. But basically it's, here's my item number, here's my branch plant, here's my quantity, here's my cost, here's my expended cost, this is how much inventory I have. Now what we also do on the general ledger side, we run a separate report. And this is typically the trial balance. We get the object accounts that we know are the inventory accounts, and we get a sum total. So the idea here is we take the information from both of these reports, and more than likely, if you're doing something similar to this, Excel is involved at some point. So we are putting data from the inventory system into an Excel sheet. We're trying to match it up with the GL balances, and typically that's where all of the frustration begins, because the numbers don't match, and it becomes very cumbersome and tedious to try to figure out where those problems lie. Okay, so with that said, let's take a look at the top 6 issues. First, I'll go over them at a high level, and then we'll drill into each one in a little bit more detail. Now, these are ranked in what I think is a priority order. And what I mean by that is the bigger or the more instances that this issue causes the problem gives it a higher rank. So if we start looking through them, the first one I'll show you is automatic accounting instructions. And by far, the setup of the automatic accounting instructions is the thing I see most often that causes reconciling items. So we'll talk a little bit about that. Okay. GL class code control and what that actually means. Okay. Product costing validation. There's some integrity reports that we can run and some checks that we can make to make sure that our product costing is up to speed. We need some process controls as well. Not everything is done inside of J.D. Edwards. We have humans who need to get involved in the process and to make sure that everything is running okay. And we'll talk a little bit about how we can manage those processes. Okay, another little known piece is called cardex integrity. And that's a scenario where sometimes, every once in a while, a transaction will occur, but the balance won't get updated for that item. So for example, if I receive 100 in and I had nothing to start with, I'll see in the cardex that I'll see that receipt for 100, but when I look at the on-hand balance, it still says 0. Now that's not something that happens very often, but it does happen, and we certainly need to address that if we want to have accurate inventory. And then finally, the last thing I'll talk about is how you actually report inventory. Did you indeed write your own report? And then how did you go about doing that? Is it a snapshot or is it based on transactions? And we'll talk a little bit about that. So let's start getting into some of the details. Okay, so the first we're going to talk about is the distribution manufacturing automatic accounting instruction. And the problem with this tends to be accuracy. If you have ever seen the DMAAI tables inside J.D. Edwards on the entry screen, you know that it can be quite a cumbersome process to get your arms around all of this. So there's 2 tips here that I like to use when looking at automatic accounting instructions to make sure that they're as accurate as they can be and they'll cause the fewest number of reconciling items. So those 2 tips are using a model table concept, which I'll explain in a minute, and then limit the use of wildcards. So if you're familiar with entry, you'll know that the company number is one of the fields you must enter for an automatic accounting instruction, and company 0 acts as a wildcard, meaning that if you have a system where you have, let's say, companies 1, 2, and 3 set up, and you enter a DMAAI for company 0, that will cover all 3 companies unless there's a specific entry. So let's say you had an entry for company 3, but you did not put an explicit one in for 1 or 2. So there were 2 entries in the table, one for company 0, one for company 3. Well, if you do a company 3 transaction, it will use the company 3 DMAAI. If you do a 1 or a 2, it will use the company 0 DMAAI. So that's what I mean by wildcard. Okay? Wildcards have a tendency to cover up a lot of things. Okay? They mask problems that really should happen. So a lot of times what I've seen after I've reviewed somebody's setup is that they actually put these in, and the asterisk is the same thing for the geo class code. They put these in to make errors go away on the transaction screen. So if I'm doing an inventory adjustment and I try to process it and I get an error on the screen that says DMAAI not set up. So people will go in, they'll use these wildcards just to make the errors go away, but the dollars end up going to a place that is not desired. Okay, so we want to limit the use of these. Now, the model table concept, what that is let me put this chart up here, and I know it's a little busy, but it's done that way by design. This gives you an idea of how complicated DMAAIs can be. So the DMAAI structure is broken down into the 4 subsystems that impact inventory. So we have manufacturing, with our work order completions and issues. We have our inventory transactions, the adjustments, issues, transfers, and you can see the list here. We have our sales order system and our purchasing system that are involved in updating inventory. Now, the way DMAAIs work is for each transaction, there's typically a pair of DMAAIs that are configured. There's a balance sheet side and an expense side. And what we're focused on is we're going to focus on the inventory side. Okay. Now, what a model table concept is we need to pick one to use as the model. And what we do is we get rid of the wildcards, we make a fully expanded setup for all geo class codes that are used for the inventory system for all the companies, and we make sure that that relationship between the geo class code and the balance sheet account is exactly the way we want it. Once we have that model all vetted out, what we can do now is get a report of all these other balance sheet side DMAAI tables that are in the setup. So you can see the text box here, or the green box that surrounds them. Now, what we can do now is compare each one to the model and look for differences. So if I have a geo class code for company 1 that says RM01 for raw materials, and in here I say, okay, I'm going to set up a cycle count, 4152 PI. For company 1, this PI says RM01 is the raw material account for company 1. Well, if that's the case, I better see the raw material account for company 1 on that geo class in all of these other tables, because it doesn't matter what transaction I do against it. If it's a raw material, the dollars need to flow in and out of the raw material account. So this is a method that we can use to look through our entire DMAAI setup and make sure that it's consistent, so we don't have dollars going to places we don't want them to go. Again, this is the #1 problem that I've run across over 20 years of looking at this, of causing reconciling items when it comes to inventory. Typically, there's an improper setup in the DMAAI, so we want to make sure they're as clean as possible. Okay, let's move on to issue number 2, and we'll call it geo class code change control. Now, a geo class code is a 4-character code that gets assigned to each item that's used in inventory, and its purpose is to control the mapping through those DMAAI tables that we just talked about. So the tips that we're going to look at here are, we want to have consistency on all of the levels. We want to have a proper control process for when a geo class code needs to be changed. So let's break these 2 down. So what do I mean by consistency on levels? Well, if we were to set up an item initially gets set up in something called the item master, and I'm sure most of you know this. So the geo class code is part of the item master setup. Now, if I have an item and I set it up in the item master, I cannot transact against it. I still need other things to be configured. So the next level down is called the branch plan. And on the branch plan, I could have more than one branch within a company. So the geo class code that I set in the item master gets copied down to each branch plant that gets set up in your system. The same with locations and lots. Just because I have a branch plant, I still cannot transact against the item. I need a primary location and or a secondary or multiple secondary locations to do it. When I set those up, the geo class code gets copied down here as well. And then every time I enter a sales order or a purchase order for that item, a geo class code gets copied to the detail line on that order. So you can see where a geo class code lives, and for one item, how it can spread into multiple locations within your system. So if I have one item and I have, let's say, 4 branch plants, that's 5 geo class codes. Okay, and let's just say I have 2 locations for every branch, right? So now that's the 1 plus the 5 plus the 10. Now I'm up to 16 spots in the system where that geo class code lives. And then sales orders and purchase orders, we just keep adding on depending on how many sales order lines or purchase order lines are out there for that item. So you see that geo class code can spread all over the place very quickly. Now, consistency means if I call something a raw material in the item master, it should be a raw material in the branch and in the locations and on the orders, okay? And it is when I first start, and if I set the item master up and assign the geo class code right away, then that will flow down and everything is consistent. Now what happens when I look and I say, well, you know, I classified that item as a raw material in the beginning. It's flowed to all these places and I've been transacting against it, but really it's not a raw material, it's actually a subassembly, or it's a finished good, or it's a different class. Now we're talking about how do I go about changing this and getting the changes in all of the proper locations. Right? So a control process, a real simple control process would be, the first thing I would need to do is I would need to find out if I have any inventory on hand. Okay? Then I would need to adjust any location with on-hand inventory to 0. Then I would change the geo class code, and then I would adjust the quantity back. Now, why do I have to do this 3-step process? Why can't I just go in here and just change all of these items? Well, the main reason you can't do that is for cardex integrity. So let's say, for example, I had this item that was a raw material, and I received it in under an RM01 geo class code. Well, what happens to the inventory system, right? I see a record in the cardex with RM01 on it. And let's just say it was for $100. So I see that transaction in there. On the GL side, what I would see is, oh, my raw material account now has $100 in it. Okay, everything's fine. But let's just say, for sake of argument, that, oh, you know, I really misclassified this. I really wanted this to be a finished good. Well, if I just went in here and changed all of these geo class codes in my pyramid over here from RM01 to FG01, how do the dollars actually move from the raw material account to the finished goods account? Because now I really need a journal entry to move the dollars on the GL side as well. Changing the GL class code does not give you that journal entry. Okay? Adjusting the on-hand quantity to 0 now means I have an inventory transaction that still says raw material, that subtracts it out. Now I have 2 cardex transactions, $100 in on the receipt, $100 out on the adjustment, both with the raw material geo class code. The GL will follow, and now I will have $0 in my raw material account. Then I change the geo class code to finished good, then I adjust it back in under the new geo class code, and then the dollars appear in the finished goods account. That's why we have to adjust these out and adjust them back if there are any quantities. So changing geo class codes is a process. Most companies I talk to do not have this control process in place. They'll just go in and change it in the locations, and they won't even get all of the locations. They'll change it at the branch level, but they won't update the locations or the lot. So you have to have consistency on your levels, and you have to have the proper change process in place in order to prevent GL class codes from causing reconciling items. Okay, issue number 3, product costing integrity. And we're going to talk about 3 things, and there are actually 3 different reports that you can run that will actually find problems in your costing, and if you resolve them, they will prevent the reconciling items from occurring. So let's talk about the first one, the ledger component integrity. And what this does is anybody who's running manufacturing, you'll know that if you're running a standard cost system, you'll have the 07. You'll have a standard cost table, which is called the cost ledger. And then what you have to back that up is something called cost components, which you'll have the material, labor, and overhead breakdown for that standard cost. So what we want to make sure that for any item that is a manufactured item that I'm with an 07 cost that has that breakdown, that the sum of the material plus labor plus overhead equals what the final standard cost is in the cost ledger. Okay, now one might ask, how do they get out of sync? We can manually type over things. There's a lot of ways that it can happen. But J.D. Edwards does provide this integrity report that works very well. So it's report 30543. You can run this report, and it will give you a list of all the items that the standard cost has an issue. It does not equal the sum of the parts. And when that happens, we will have problems in manufacturing accounting. Okay, so we want to make sure that our costs are clean. Okay. That's the first one. The second one is something called WIP revaluation. Now, what WIP revaluation is it happens when I do let's say I'm running a standard cost system and I do an annual cost roll. Or some companies will do partial cost rolls during the period for new items, or they want to do something like that. Whenever I do a cost roll, if I have work orders that have already had their parts list attached, the second I attach a parts list, a copy of the cost components are written to the work order. So, for example, if I have an item that's issued to it, that's on the bill of material, on a parts list for the work order, and let's just say the standard cost is $1, and it's 80, 10, and 10 for material, labor, and overhead. Okay, I attach the parts list. The parts list for that item now has the components on there of 80, 10, and 10 for the $1. Now let's say my material cost goes up and I do a roll on that item. So I do a cost roll and my standard cost now changes from $1 to $1.10. And let's just say now it's 90, 10, and 10, material, labor, and overhead. Okay. Well, that work order that I attached the parts list to, and I have not issued material to it yet, so this part has not been issued, right, still has the 80, 10, and 10 on it. Okay. So now, once that goes through manufacturing accounting, I complete or do a partial on the work order and I book this, it's going to book with the 80, 10, and 10 and not the 90, 10, and 10, right? So the inventory system, if I issue the part after the cost roll was done, the inventory system is going to see the 90, 10, and 10, so it'll see $1.10, but the GL will only see the 80, 10, and 10 will be $1. To avoid that, you have to run what's called WIP revaluation. And this is relatively new to J.D. Edwards. It's the 30838 report that you can actually run in proof mode or update mode. Okay, and it will go through your open work orders and it will say, oh, you guys have done cost rolls on this. We need to revalue this WIP. Okay, we have to do that because we've had a cost change. And now that will keep your inventory in sync. And once you do that, you will find that your manufacturing variance will decrease tremendously. Okay, so that is a very, very important thing to know, and not a lot of people know about that. Okay. Now, finally, the third one I'll talk about is multiple cost integrity. Now, this one is not common, and it does not happen very often, but I've seen it often enough to include it in the slides. And what that is sometimes, like when you copy costs from one branch to another, sometimes there are different cost methods that get marked as the inventory cost. So, for example, if I'm running a standard cost system, my 07 is flagged as the cost to use for inventory. And then I have an 08 cost for purchasing. And sometimes that gets flagged as the inventory cost as well for the same item. So now I have two different cost methods that are flagged as the inventory. And I've seen this more times than I'd like to admit. So what you have, there is no integrity report in JD Edwards to do that, but as part of the slide deck, and you guys will be able to get a copy of the slides, is there's a little script here that I wrote that will actually go and find any of these multiple cost issues, and then that will allow you to go into JD Edwards and correct them. Okay. Again, I would not expect that if you ran this on your system that you would get 10 pages of problems. You might get one or two items. You will most likely get nothing, which is a good thing. Okay, but you might find one or two things. And depending on how you write your inventory report, you could be double counting or triple counting things. So you just have to be careful and make sure that these things are taken care of as well. Okay, so let's move on to issue number 4, and that's control of the back-end process. And now what this entails is we have some transactions that we do that don't immediately hit the general ledger. So for example, if I were to receive some items in against a purchase order, I get an inventory transaction I see in the cardex, my quantity on hand goes up, and I also get a GL batch created all at the same time. Now that batch isn't posted, but it does get created. So instantaneously, my inventory and GL change at the same time on a purchase order receipt. It does it also on an inventory adjustment, an IT transfer, or an inventory reclass. Any of those types of transactions, my GL stays in sync with my inventory pretty well. There are two, however, that do not. One is manufacturing transactions. We need manufacturing accounting to run. So if I complete a work order at noon, the GL knows nothing about this until the next time manufacturing accounting runs. That's the program that creates the batches and puts all the entries into the general ledger for those transactions. So there's a time delay there. The same thing on sales orders. When I ship confirm something, my inventory goes down as soon as I ship it, but the GL does not know about this until I run what? I have to invoice, I might have to print a bill of lading, I might have to send an advance ship notice, and then finally, I'm going to get to sales update, and the sales update program will create all the journal entries for my shipment. And then finally, the last step would be to, of course, now that I have all these GL batches, I have to make sure that we post them all. So let's take a little bit more of a detailed look at each one of these three items. Okay. Now, when we're talking manufacturing and accounting, what we want is we want two versions to run. So when I have a work order out there and I'm processing against it, it can be really in two states. It can be fully completed or partially completed. Now, fully completed means I set up a work order for 10 end items. They're all 10 of them are built. I'm fully closing this work order. A partial means that, oh, I put my work order out for 10, I've completed one of them. Or I haven't completed any of them, but I have issued material to it. So I have transacted against this work order. Okay? So what the partial version means is that I'm going to run a version of manufacturing accounting that updates the work order, that creates the GL batches, but does not change the work order status. So if that work order is at status 40, it's going to stay at status 40. And I can keep running a partial version of manufacturing accounting to pick up all the transactions that I've done that day. Okay, the work order does not have to be fully completed. Right. Now, the version that everybody has in place is the full completion, which means, okay, the work order is done. I want to book my entries, and then I want to bump the status to 45 or 90, wherever you put it, to run variance accounting. Okay. So the trick here is to realize that you really do need two versions to keep your transactions up to date. You want to have a daily input of your manufacturing work into the general ledger. Don't wait a week or week or more. Run manufacturing accounting twice a month and expect to keep on top of things. Okay, so the recommendation would be to have the partial version here. Now, on the sales order side, what we're going to want is we're going to want a status report. Now, typically sales orders are controlled by status. We know 560 means it's ready to be shipped, and usually 580 is invoicing, and 620 is sales update. What you want to make sure is that you are able to get a list of the sales order lines that are at each status. Because what happens if somebody goes on credit hold or some other blocking happens and a sales order gets stuck? Well, if I ship confirm it, the inventory is already gone out of JD Edwards. Okay, so quantities have been decremented, transactions have been done. The GL doesn't know until I get the sales update. Well, maybe I never get the sales update. You need to know that. So these things can be fixed. They could have been manually overridden at bad status codes. There's a lot of reasons. So we need this status report so that you make sure your sales pipeline is clean and everything is up to date. And the second thing is the versions of sales update that you run. There needs to be more than one. Like a standard sale in a STOT transfer would have two separate versions because of invoicing, and there are different processing requirements for each one of those. And we need our different sales update versions to accommodate both of those. Okay. So we want to make sure that those are okay, that they're picking up the orders as they should. All the data selection is correct for the branch plants, the order types, all of that stuff. So all of that would need to be reviewed as well. You can find out if you are having problems here just by using the status report. Okay, so anything that gets stuck and is not getting processed, now you'll be able to have a list to drill into. And then, of course, finally, the GL batch postings. Most companies have this already handled pretty well. You know, we talk about things like auto approve and post. So if you guys do manual approval of batches, I always ask why. Because if you never reject a batch, why would you take the time to look through it? Just let the system do it and post it. But one thing that is important, another thing that's important, is something called a missing header integrity. Every once in a while, Edwards will drop a batch header. And if it drops a batch header and you look on your batch posting screen, it won't be there because it depends on the header to show up on the screen. If it doesn't show up on the screen, then you can't post it. So there is an integrity report. It's in JD Edwards for missing batch headers, and it will identify any of these missing scenarios, and you'll be able to recreate the header and process it along. Now, also in this, there is a processing option that says, oh, by the way, the report is smart enough to rebuild the headers for you. Okay, so I would always recommend putting a version of this on to say right before the batch postings run, so in case any headers are missing, have the program recreate them right before you post your batches, and then you won't have to worry about that anymore. Okay, so it is in there, and you should use it. Okay, the fifth issue, managing the cardex. Okay, now, if almost consider this like balancing your checkbook. You have all of these deposits and withdrawals in your checking account, and when all the deposits and withdrawals are summarized, okay, they should equal the balance. Right? So we need to summarize the quantities and amounts, and this is item by item. The transactional details should add up to the balance. You have to be cognizant of the item you're looking at, whether it's a standard cost or average cost, because the filtering would be different. You can look at them at different levels. So let's talk a little bit about that. Okay. So what you do is, the first thing you do is on the grid here, you can get all the different transactions and you export them to Excel. Okay. And that way you can go ahead and summarize very easily the totals of all the transactions, and we're going to want to do quantities and dollars, of course. Now, when you look on the top of the screen, you see this quantity on hand and this value. These do not get calculated from these transactions. These are balance numbers that come from a different data set. So the quantity comes from your item balance table that says, oh, I have 2474 on hand. Okay? The value is this number times whatever the current inventory value is, whether it's a standard or a last in or average, whatever it is. So that times your unit cost equals this amount. Once you export this and summarize it, and you summarize the quantity column, it needs to add up to the 2474. If it doesn't, then we have a problem. Okay? So this item does not add up correctly. So the balance would need to be adjusted to make sure it equals the sum of the transactions. The same with the value. Okay? And there are ways that you can do this. Okay? It is very difficult because if you have tens of thousands of items, you can't just do one report that's going to say, okay, does my total match or doesn't? This has to be done item by item. Okay? So it is a bit of it's a cumbersome process. You don't just do it because you would probably have to suspect something is wrong with a particular item, but there is this process that you should use to go ahead and get this worked out. It's very, very important that this lines up. This is where a lot of companies will fail audits because the auditors will check this to make sure that the sum of the transactions and the balance agree. Okay? Now, and finally, we're going to talk about how do I get an accurate inventory report? What are my options and what do I do in order to get the best inventory report I can actually get? Now, there are two methods of doing it. I'll call them, the first one is called balance-based. And what that is it's a snapshot at period end. And I would say out of 100 companies I visit, 98 of them have a balance-based inventory report, which they will run at a particular time at the end of the period. What they'll do is they'll say, here's my quantity on hand for every item. Here's what the unit cost is for every item. I do an extension, and I get a number at the end. Okay? Now, the problem with that is if I have 24/7 operations, I'm going to have to stop. Okay? And also, what about backdating transactions? Sometimes that happens as well, especially with work orders. Sometimes we backdate this and we want a transaction that happened on the first day of the month to actually be credited to the prior period. Okay? So those are things to consider when you run a balance-based inventory report. Now, as opposed to a transaction-based report. And with a transaction-based report, because they're based on cardex transactions, you can run it at any time. Okay? Operations don't have to stop, right? Because every transaction has a date on it, and every transaction can be assigned to a period. Okay? So it's a much more difficult report to write. So the question becomes, well, how can I get this? So let's say I'm doing a balance base. I do have 24/7 operations. I am aware that we have this noise at the end of the period. How can I get a more stable, more accurate inventory report? Well, we're going to show you how we can do that. Okay? Now, with our solution, which is called RapidReconciler, we have validated this with Oracle. It's designed specifically for J.D. Edwards. We are capable of reconciling your perpetual inventory. We have a custom-built goods in transit reconciler that works very well. And we can also reconcile the received not vouchered. But today we're just going to focus on the perpetual inventory. Okay? And some of the benefits of this, all of those issues that I talked about, those 6 big issues, all can be dealt with by RapidReconciler. We can tell you where your mismatched DMAAIs are. We have a model table built in. We do the comparison to all those other ones. And we spit out a report that says, here are the DMAAIs you should look at. We also have an inconsistency report for your geo class code. Have they been updated in all the right places? Okay. We have our own version of the frozen costs and multiple cost reports that are available to you right out of the box. So it's all point and click, so you can see where all the problems are coming from. Okay. We also take care of the back-end process reporting. So we'll show you what work orders aren't processed, if you have anything stuck in your sales order pipeline, if there are GL batches that are unposted or not, and whether the headers are missing or not. So we can identify all of that stuff. And then we do run a transaction-based inventory. So we have our own calculation strategy. We are not dependent on the J.D. Edwards as of, and it is transaction-based. Okay, so that's very important. Okay, so what I'd like to do is just let me get out of here, and what I'll do is just let me briefly go through the application. All right, so here's kind of what it looks like. It's a web-based application, but your business data never leaves your firewall. So we are not dragging any business data up onto the web. It all stays on your internal network. Okay, so here are the main modules over on the left. You can see there's inventory and transit receipts. There's an admin section. And there's also a university, which gives you directions and concepts along with video of how you use the tool. You just click on it. So we have all the help built right in. Okay, there's a video library down here that talks about things such as GL class codes, how the model DMAAI tables work. So there's a whole library of videos and resources here that you can use to help you with the reconciliation. If I look at the inventory, notice when that expands, it has all of these different pages, the reconciliation transactions as of. You can see them all here. And the way that it works is all of the accounts that we have set up in our model table as inventory accounts show up in this filtering list here. So you can see that this particular setup, we have two different companies. We have a US-based company and a European company. Okay, so for the sake of argument, let me just unclick one, and you can see that all the numbers have changed. So the filters here and the clicks mean that I can look at any combination of accounts, business unit, object, and subsidiary that I want to do in a reconciliation. So if my business units are broken down by warehouse, I can do warehouse by warehouse and get that inventory right away. Now, the way that we calculate the inventory is we get our trial balance number from the GL, and again, this number is the total based on what I have selected in the filters. The perpetual balance is the internally created inventory as of based on cardex transactions. Okay, so we assign every transaction to a period, we roll it forward, this is the number that the GL should be. Here's the difference. Okay. Now in our variance calculation, we tell you all of the different variance sources. So, for example, if I were to say carry forward means that from the prior period, I was in balance. I'm not carrying any variance forward. Right, so that's perfect. GL batches. Do I have any GL batches that aren't posted? And the answer is no. Everything has been posted. All right, life is good. Okay. End of day. This is my pipeline report. Do I have sales orders or work orders that have hit the cardex but have not been processed to the general ledger? And for this particular example I have here, no, everything is processed. Life is good. Okay. Transactions. Of the transactions that were completed, did the cardex amount actually make it to the GL? Did the dollars match on both sides? Here the answer is no. Okay, so we had $433 worth of transactional variance. So just by looking down here, you can see where your issues are. Do I have batches to post? Do I have sales orders to process? Right? Do I have perhaps a DMAAI issue or some other issue that I need to drill into? Okay, so I'm going to try to find here. Okay, I don't see any, but every one of these has a drill down capability. So if I hit the preview, it would give me the list of batches. This would give me the list of work orders and sales orders. Here and it's going to take me to the transaction page. And here are all the transactions where the cardex and GL did not match up. There's some differences here. Okay, so you can filter on all of these and break them down, and it'll say, where's my biggest problem? Let's just take a look at this $4,000 in sales. So I can come over here and isolate and say, here are my sales transactions. I wonder what order types are causing the problem. Okay, well, let's see, SISK net out. Okay, so here it looks like CO, CWs are the big ones. Okay, so now I can say, let's take a look at the credit orders. Here are the credit orders. They did not hit the GL, but they hit the cardex. Okay, and then we can look into why that is. So we can drill down into the transaction detail, and it will give us a listing of all of the different line items from both the cardex, the GL, how RapidReconciler processed it, and we can export those details to Excel. Okay, so it's pretty simple to do. Okay, so here's all the details. In this report, let me export it real quick here, because we've recently made an enhancement that makes this so much more powerful, is we give you the whole DMAAI breakdown for the transaction as well. So if I open this up, I know I only have a few minutes left here. Okay, just drag it open. Okay, and here's the transaction detail report. So I can see, here's what happened in the cardex, right? So I have these transactions. Here's what happened in the general ledger for this transaction, okay? Here's the sales order itself. Here are all the different line items on the sales orders, what the line types are, what the status are, what the branch and items and quantities and costs and all of that stuff is here, okay? Here's the DMAAIs that are involved in this transaction, okay? So we can see all the different ones for all the GL, everything was one GL class code. And now we have, here are all the tables that are involved. So now we can investigate the whole accounting structure as well to see how this booked, okay? Because most of the time the problem is in the DMAAI, right? So we give you all the information, very easy to get for any transaction that you want, okay? So that's how this works. Okay, we also have an as of, right? This is the as of that RapidReconciler has built. So if you're doing an item investigation, we have filters. You can get all the inventory for an item. You can get it by branch, by location. You can look by lot number. And we also have something called a daily as of. So for this period ending date up here, if you hit the down arrow, it's going to give you all the dates within that period. And if you want to know what the inventory was on any given day, you can just select the day, and it will give you the output for that. Okay? There's a lot of features built into our as of. So whether you do it this way in full level detail, you can summarize to the item, which will get rid of the locations and lots, and just give you a summary report. There's a lot of different ways you can use the data here. And the last thing I want to show you with the inventory are all the different integrity reports. So here's our model table that we had built and had vetted out. Here is all of the DMAAIs that don't match up. And this data is actually production data out of somebody's system. And we cleaned up all of their DMAAIs. So now they don't have any more issues. Am I missing any GL class codes from our model? Sure am. This NS40 GL class code is non-stop. We don't want to count them. So they should be here. But we can look at all the different GL class codes and say, ooh, this one should actually be in our model. We're missing something. So let's make sure everything that we want counted is counted. Okay. Unit of measure conversions. Here, I don't have a pound to foot conversion for this item. Okay. Primaries and feed, I did a transaction in pounds. How is the system supposed to convert that? Right. So we look for things like that. GL class code integrity. Do I have items that I've changed the GL class code on? Oh, yes. Okay. So I have a handful of items here that we don't have a consistency set up with these. Okay. So you can see pros and costs. Is my material, labor, and overhead add up to the unit cost? No. For these items, they do not. All right. So I may need to do a re-roll on these. Okay. Duplicate item cost. There's the one I was telling you about, whether or not the 07 and 08 are both marked as the inventory. So that's built in. Duplicate sales. A sales order line can only appear in the cardex one time. These, there was a system issue, and they appeared in the cardex twice. The same group of transfer orders, in this case, were double booked. Okay? So we can do all different kinds of things like that with our integrities, and it's very quick to go through all of this stuff. So RapidReconciler addresses all 6 of the issues that we talked about. When we went through the details, I did give you vanilla J.D. Edwards solutions where possible. But RapidReconciler, what this does is it puts everything together into one interface and makes it very easy to gather all your information for a period end reconciliation. Okay, so with that, what I'd like to do is to turn it back over to Brooke.
Thank you so much, Ed. That was great. We really appreciate it. Let me know when you can see my screen.
I can see it.
Okay, great. Well, thank you so much. I just want to cover a few follow-up items, and then we'll move into our question and answer section of the webcast. Our webcast today is a part of GSI's free ongoing educational webcast series on J.D. Edwards, and our upcoming webcasts are currently listed on the screen. And to view our most up-to-date schedule, please visit getgsi.com/webcasts. And also we will be at Collaborate in San Antonio, Texas on April 7th through the 11th for a great week of education and networking with your J.D. Edwards peers. So I just wanted to let you know that we do provide an extensive free educational resource center for the J.D. Edwards community, including our weekly educational webcasts, our monthly newsletter called the GSI Insider, our online resource center where you can access our on-demand webcasts, white papers, and so much more. And we also offer on-site and virtual workshops. If you'd like to sign up for our weekly email reminders for upcoming webcasts, our monthly newsletter, or create an account, to access our resource center, go to getgsi.com, go over to platforms on the main menu, select J.D. Edwards, and on the left-hand side. And all right, let's see. We have a few questions here, Ed. Our first question is from Tanya, and she says, can you please repeat where the quantities and amounts at the top of the cardex come from?
Okay, so that's the item ledger screen that we were looking at. The quantity on top actually comes from the item balance table, which is the F41021 table. So it's the same as going to the summary availability screen for the item. You'll see the on-hand bucket. That's what's being reported on the top of that ledger screen. Now, that quantity there is multiplied by whatever the inventory cost is for that item. So that comes from table F4105, okay? And the one that's flagged as the inventory value for that item is the one that's used as the multiplier. And the amount that you see on the top is just that unit cost times the quantity.
Okay, great. Thank you so much. Our next question is from Bill, and he says, how can you correct carry forward variances?
Okay, well, that's going to depend on what the actual issue was. So notice that the product itself is it's a database, and it has multiple periods in it. So when we put it in, we usually do it from the beginning of the fiscal year. So I was looking at an August period, and it had a carry forward of 0, but let's say it did have a carry forward. We would just go back to the period that it actually happened in, and then figure out if it was a GL batch that wasn't posted, if it was a work order that wasn't processed. So we could do that and then go back and fix it. Now, if we went all the way back to the beginning of the year, let's say, and there was a carry forward from the prior year, then that would have to be dealt with a journal entry. There's no other way, because we wouldn't have any other information. Okay. So again, it's going to depend, but all of the different details are captured, and we would be able to make the decision on what to do based on the information that we have.
Okay, great. Thank you so much. We have a question from Dan, and he said, question on managing the cardex. We have issues where the cardex detail does not match the F41021, F4105, with the summary file being the correct amount for the branch to use. With the integrity report being used, when can you change the cardex to match?
Okay. Well, in my opinion, you never change the cardex. So again, if I use the checkbook analogy, it's, let's just say I had, I opened a new checking account, I made $200 deposit, and I got my bank statement, and my bank statement said my balance was 100. So now my balance isn't correct, but I have the deposit slips for the 200. If I'm going to the bank with deposit slips in hand, they have no choice but to make it, right, to make it $200 because you have the proof. The transaction detail is the proof. Okay, so if it's not in there, it didn't happen, whether it was problematic or not. So my default position here is to always make the balance equal the sum of the transactions. That's step one. Okay. Now, to your point of saying, well, you believe that the summary amount is the one being correct, well, that's fine. Then you can do another transaction, an inventory adjustment to get the balance back to where it was. Okay. But then once you do that, now you have transactions that account for the balance. That is the bottom line, right? You always, always, always have to have transactions that add up to your balance. There is a way to do it. It all depends on, you know, the details of your situation. Now, if you also, you're saying that the GL is correct and you wouldn't want to change it, well, you can set up a transaction where the debit and credit to the GL flow in and out of the same account so that you won't have a GL impact. Okay, so again, it's a specific thing. It's going to depend on the situation itself, but there is a way to get it straightened out. The typical one is make your balance the same as the sum of all the transactions. If you suspect the balance is incorrect, go do a count. Get the right number, then do a PI adjustment or an IA adjustment, whatever, to get the balance correct. Then you can adjust the GL with a journal entry to make the GL balance again. But that's what you have to do, right? So you cannot have an integrity problem in the cardex. We have to eliminate those.
Okay. All right. Perfect. And Dan said thank you.
Okay.
Awesome.
You're welcome, Dan.
Thank you so much, Ed. I really appreciate it, and everybody for your questions. That appears to be the end of our questions for today. And as a follow-up from today's webcast, we ask that you complete a short 1-minute survey when you exit, and you will be receiving an email with a link to our resource center on our website where you can access the recording from today's webcast, as well as a copy of the presentation. And after today's webcast, we will do the drawing for the $25 Amazon gift card, and anyone that attended the entire webcast will be eligible, and we will notify the winner. And if you have any follow-up questions, you can contact Ed or myself, and we will make sure that we will get back to you with any questions that you may have. And our contact info is currently listed on the screen. Thank you so much, everybody, for attending, and Ed, for your great presentation. And we hope that you have a great day. Oh, yeah, sorry.
Well, can I mention one more thing?
Yeah, please.
I just wanted to put out there that what we offer is something called a proof of concept, where for a small fee, what we'll do is we can actually import your data into the RapidReconciler tool on our hardware and do a presentation back to your team or your decision makers. We've had very good success with that. So if it's something that you know, if you're having trouble with inventory and you want to see how RapidReconciler can find the issues, give you numbers, look for issues, it might be something you want to consider. So if you want more details on that, just reach out to myself or Brooke, and we'll put you in touch with the right person who can start that process. So highly recommended. Again, we've had great success with it, so I just wanted to make you guys aware of it in case that's something that interested you.
Great. Thank you so much, Ed. I appreciate it. All right, everybody. We hope that you have a great day. Thank you again.
Thank you.
All right. Bye-bye.